If you're looking to assess a new rental property and understand the potential profits and yields, then this tool is for you. In today's video, I'm going to be walking you through my Buy-To-Let Deal Analyser step by step so you can see how it works and how to get the most from it. This is for anyone who's interested in analysing a buy-to-let property deal, whether you're just starting out or a seasoned investor. And stick around till the end because I've got some bonus tips to help you in your analysis. Hi, I'm Raminder. I'm a financial modeller with more than 15 years of experience working with a range of clients from startups to side hustle businesses right up to large established companies where I've helped them get clarity and structure through smart strategic spreadsheets. Before I start, a huge thank you to you if you've already purchased one of my deal analyzers. It really does mean a lot. And if you haven't purchased one yet, and if you're looking to get one, please head to the link in the description box below where you'll be able to get one from my website. Okay, so let's start at the info sheet, which has an introduction and some step-by-step instructions. We're going to go through these in today's video, but this is just here for your quick reference. This also outlines some of the key calculations and metrics used in the spreadsheet. So you will notice that there's two lists here, one for property type and one for ownership type. I've already pre-populated these, but these can be changed at any time to suit what you want to add. Simply delete, amend the existing entries, or add additional new options. Next, I want to show you the glossary page, which outlines all the key terminology. This calculator has a dashboard, an analyzer, an integrated renovation planner, and a supplier contact list. Before we begin with the calculation sheets, I just want to show you the supplier contact sheet, where you can enter all your supplier contacts for the project so you have them all in one place. Simply add the name of the company, any tasks that are associated with that company, the contact name and contact details, and some space to add notes too. This can be filtered so you can see all the items relating to a task, for example, or you can sort this alphabetically. It's totally up to you. Okay, so let's head to the analyzer sheet. There's quite a lot going on here, so let me just zoom out to show you what's going on. We start off with our key property details, then we have some space to analyse some comparable properties, then we have 3 sections to capture key costs, and beneath that we have our financing calculations for both our initial purchase and the remortgaging. We also have a section here to look at our monthly income and expenses from the property once it's rented out. Underneath that we have some space to make notes and add some images or floor plans. Okay, so let me just zoom back in so we can see a bit more detail. This section captures the key details about the property and the purchase. Let's start by selecting our currency from the drop-down. Hopefully the currency that you require is on the list. If it's not, please let me know and I can add it in for you. Then add the property name, address, and the website link. The property name is simply there just to update the titles of these pages. Then add the listing date, select the property type, select the number of bedrooms and bathrooms, and then add the surface area and the ownership type. The property type and the ownership type lists are those that we saw on the info sheet. If you need to make any changes, just make them there and then we'll feed through to here. Then add the asking price, the purchase price, and the estimated completion date. Select the number of months that you wish to hold the property while you renovate, and this will drive the estimated tenancy start date. These inputs can be changed at any time throughout your deal. There is also a section here to add some images or floor plans. You can add these by simply going to Insert on the toolbar above, go to Pictures, Place over Cells, and then select from wherever your pictures are saved. Next we go on to the Comparable section where we can list up to 4 comparable properties. This is so you can get an idea of what kind of similar properties have been rented out in the nearby area in recent months. Enter the property address, the distance in miles, the monthly rental amount and the rental listing date. Then you can add the size of the property and the number of bedrooms and bathrooms, and you can add a website link for reference, and here's some space for notes too. This is a really useful exercise to help you validate the potential of your rental property. Now we move on to our cost section, and the first section is the purchase cost section where we need to list out all the purchase costs for our initial purchase. The first line is an automated calculation which picks up the mortgage fees, and I'll talk through that when we go through the financing. This is where you need to list things like stamp duty, your legal fees, search fees, sourcing fees, and anything else that goes into the actual purchase process. For each cost item, you have the option of either applying the percentage of purchase price, a one-off cost, or both, and then this is auto-calculated into the total column. Then we move on to our holding costs. These are costs related to holding the property while we renovate, so things like mortgage payments, utilities and property taxes. In our assumptions above, we have assumed that we're holding the property for 5 months, so our bills will be apportioned for that time period. So we have 5 months worth of mortgage payments. This is auto-calculated and I'll show you how that works as we get to it. Then we simply list our cost amounts and their frequency. So for example, our gas and electricity might be £200 a month. Then our council tax might be an annual charge of £18.50. The total column will apportion the annual charge to the 5 months hold time. And if we scroll up and change the hold time to say 3 months, you'll see that this has all changed. Now we move on to the renovation costs. So this calculator has an integrated renovation planner. So this section will pull through all the costs and the dates from the renovation planner sheet. I've split the renovation process into these key areas, which hopefully capture most of the development phases. Okay, so let's head over to the renovation sheet and start adding some renovation costs. So first things first, we can add the start date of our renovation. This will then update our project timeline, which is split by day and then by weeks and stretched over 18 months. Each of the categories that we saw on the analyzer sheet are listed here with some space to enter specific tasks within that category. Then it's simply a case of populating the relevant sections and it will all feed through to the analyzer. So let's add some tasks. You can add in a supplier if you would like, add a cost and a quantity, and this will total up here. If there is no cost to the task, you can just leave it blank. Then we add in the number of days that it takes to complete that task, which are rounded to the nearest whole number. Then we enter a start date for that task, and then the end date will automatically update. Then, as we progress throughout the project, we can add a percentage of progress here, which will update the timeline. So due to some limitations of Excel, it won't show you exactly the percentage split on the timeline itself, but it's enough to give you a broad perspective. Okay, so let me update the rest of the renovation planner. And now let's head back to the analyzer to see a summary of our renovation costs. As you can see, we now have all the dates and costs updated in this table. It might be that you don't want or have a full breakdown of costs and dates, and maybe you've just got a ballpark figure. That's totally fine. Just add it to the other section on the planner, and then the costs will feed through to here. Then we move on to our financing for our initial purchase, which is divided into mortgage, bridging, and cash. It might be that we're thinking about getting a mortgage for this deal, so we simply add in our loan to value, our interest rate, and our arrangement fee. For the arrangement fee, you have the option of paying upfront or adding it to the loan. Then you can list any other fees and amounts in this bit here. The summary below will calculate how much loan you'll get based on the LTV and the purchase price, and then how much deposit is then required. It works out the monthly mortgage payment on an interest-only basis and summarises your mortgage fees. As we selected upfront payment for our arrangement fee, it will be added to the total fees here. But if we change this to added to loan, we can see that the fees go down, and then this is added to our loan amount, which also increases our monthly mortgage amount. The mortgage fees feed directly into the purchase cost section, and the mortgage payment feeds directly into our holding costs. It might be that we're also weighing our options and thinking about a bridging loan. So in this section, we can add our LTV, our monthly interest rate, and our loan term. Then we can add in our fees and see from the summary how much net loan we will receive minus the interest and the fees, and how much deposit is required through this approach. This number here is the total cash required on this deal, which adds all our deposit, our purchase costs, our hold costs, renovation costs, so we can either pay that amount ourselves with our own cash, or we can use a private investor. To use a private investor, check this box and simply enter how much you wish to borrow from an investor, the term, and then the amount of interest that you will offer them. This summary option then allows you to choose how you fund the project. So you can tick either the mortgage option or the bridging option, but not both, or you can uncheck them both and fund the entire deal by cash. And then we go on to our refinancing costs. So once you've done your renovations and are looking to get it rented out, we can add our refinancing date here, select our mortgage type, whether it's interest only or capital and interest, add our LTV, annual interest rate, the term of our loan, and again for the arrangement fee you have the option of adding to the loan or paying upfront, and this works in exactly the same way as above. And then finally we can add our monthly operational income and expenses which relate to the property once it's let out. The monthly rental income comes from our assumptions at the top, and then I've just left a couple of extra lines to add any additional income that you might have. And then we have our monthly expenses that we need to cover. So we have our monthly mortgage payment which comes through automatically from our refinancing section here. And then we add our expenses, and again we can add as a percentage of monthly income or a value or both. And they'll feed through to the total column, which will give us our final monthly operating profit or loss. Before we head to the dashboard, here is some additional space to add some more images and plans and notes. Okay, so let's head to the dashboard. This brings through a summary of everything that we've entered on the analyzer sheet. We have some headline figures at the top, some summary tables below. So firstly we have the summary of our property details, and then we have a summary of the total investment required. We can also see if we bought below market value, and then any potential equity gain by comparing our purchase price and the end value. We also have the total cost of the deal, which is our purchase price plus all of the costs, and then a split of how we are funding the deal. Then we have our summary on how much cash is left in or released from the deal. So we have the amount of our refinancing loan, we pay back our mortgage loan, pay back our investor plus their interest, leaving us with how much cash is left in or released. And then we have our return on cash invested and our gross and net yields. We can play around with the assumptions. For example, if we wanted to see what happens if we went for a bridging loan, we just need to head back to the analyzer sheet. Uncheck the mortgage option and tick this box here for the bridging loan, and then we'll see that we need to pay back the gross bridging loan as well as the investor loan and the interest, showing us our updated cash in the deal or cash release. And it might be that we want to fund the entire deal by private investor cash or maybe even our own cash. We can just make the adjustments here. Beneath this we have a summary of our refinancing and our monthly operating income and expenses. And then I've created some charts to give you a visual summary of the deal. So we've got our key dates from listing to completion to refinancing and then finally to tenancy. And then we have a deal cost breakdown so you can see where proportionally your money is going. We have a monthly operating income and expense chart and a chart to show the breakdown of your cash in or cash released. And finally we have an 18-month overview which has a map of the key dates involved and an allocation of your costs. And then below that, we have a funding movement table, and then we have our cash flow summary showing your monthly operating cash flow from your rental. Every property deal is highly nuanced, so this calculator won't catch all the options, but hopefully it will give you a good guide. If you're looking for something a bit more specific to your business, I do create tailor-made models and spreadsheets, so please do contact me through my website if that's something that interests you. Additionally, if you'd like this branded to your company colours and logo, that's also something that I can do. All links are in the description box below. So now we know how to analyse our deals, I just want to give you 3 quick tips to help you in your process. Beyond the obvious mortgage and repairs, don't forget expenses like service charge, like ground rent, landlord insurance. Including these, just make sure that you have a complete picture of your monthly expenses. Understanding the market just makes the difference between ongoing returns and vacancy issues. So ensure that you've researched the local area, who's renting, what they want, and what they're willing to pay. Even though buy-to-let is usually a long-term play, it's always worth considering your exit strategy. Market conditions, capital appreciation, tax implications can all impact your return when you're selling, so plan ahead and stay flexible. Thank you again to those who have purchased my deal analyzer already, and for those who haven't, don't forget to check out the links in the description box below. I release similar content every single week, so I would love for you to subscribe and join me in those future videos. Thanks so much for watching, and I'll see you in the next one.